Greetings, this is Roger Conrad. I'm the editor of Utility Forecaster, Canadian Edge, and co-editor of Vital Resource Investor. And what I want to talk to you about today is specifically AT&T's earnings and also the larger issue of running with the herd on Wall Street and some of the dangers that this particular example makes clear. Obviously, it's much more fun to run with the herd on Wall Street than against it, where you risk being trampled. But I think very often it just sort of pays to stand clear and let the herd do what it wants to do, and then pick up the pieces thereafter. You know, if you take a look at AT&T's earnings, very widely anticipated statement, I guess a couple of weeks before the announcement was made by one of their executives, was interpreted as saying that there was perhaps an earnings warning, perhaps a lot of degeneration in their wireline business, particularly in the broadband business. But and that of course triggered a pretty major sell-off in the stock. The herd really turned negative on the stock at the same time, and the stock came down. Now, what happened with people long-term investors who followed that, I think, are probably a little bit sorry at this point. We've had the earnings come out for the fourth quarter. And of course, a lot of people expected their wireless arm to do very well. They have the iPhone, which is a very popular device, gradually gaining more and more popularity. They've done very well with that. More importantly, they've been upselling people to new services over their wireless phones, which is increasing their margins there. They're gaining economies of scale, so it's been a real bang-up business for them, and this quarter, of course, reflected that. Not just with subscriber gains, but with also the basic margins and profitability of that business. I think what was most probably astounding, I guess, about the earnings that came out, though, were some of the other factors, and particularly the ones that were more company-wide. A lot of people have been, one of the big bear cases, and one of the reasons the herd really moved in the negative direction on the stock before the earnings came out, was that people were worried about the wireline business. And this country, as other countries around the world are doing, is gradually moving away from the copper phone line connections that have basically served the country for the last century, and into more sophisticated, complicated, and ultimately more profitable modes of communication for the providers, meaning wireless communications and now broadband communications, where telephone providers aren't just making phone calls, but they're also selling everything from high-speed internet to entertainment service. So this business has been looked at very much scrutinized by investors, and with the main question being, will the broadband growth offset the wireline losses over time? And AT&T is, like most of the other wireline companies, has consistently proven that that's what it's doing. In fact, upselling people to more sophisticated services, more profitable services, and usually on a more profitable type of network, cheaper to run, and dropping the copper phone connections. Now, the herd is still looking at the copper phone line losses. That's still basically what you read when you see commentaries on many of these earnings, and therefore people get the impression that everything is degenerating. But this is a company, again, bottom line figures looking very good. Earnings expected to grow in double digits next year. A lot of free cash flow out there. In fact, that's supposed to which is basically cash flow less whatever they have to spend in capital expenditures, expected to come in even above this year's figures, despite a very ambitious construction budget. So a lot of very good things here. People, again, in the herd right now concentrating on the negative, and that's really at the time when I think investors need to sort of step out, use their common sense, and decide whether they want to make a buying decision on some of these stocks that really get kicked down, but yet the numbers are good. It's a tough strategy to follow. It's particularly in a very turbulent market, but again, I think it will be one that will make things happen for portfolios going forward. So thanks for tuning in.